you like some tips on how you can really enjoy your Forex trading? If you would, listen up, I've got some really good tips to share with you right now. Hi traders, it's Andrew Mitchem here, the Forex Trading Coach. Today is Friday the 26th of February and I'm here on the beautiful beach of Oniroa, which is on Waiheke Island, just off the coast of Auckland here in New Zealand. And I want to share with you some tips about how you can best enjoy trading. You see, what I've done today is because I'm just taking trades on the daily charts and also I've looked at the 12-hour charts and the 6-hour charts, it means that I can be here, I've sat down at a cafe, had a coffee and some breakfast, taken my trades, and now I've got really the rest of the day to enjoy this beautiful place and before I need to go back and look at charts again. Now the reason for that is several things. One, when I'm trading the daily charts, it means I just need to look at the charts just once a day. And there's so many people I hear from that are just saying, you know, Andrew, look, I'm doing okay at trading, or you know, I might be making some money, and most people actually say that they're losing money when they come to me. But the problem is that so many people just think that the best way to trade is to stare at 5-minute charts all day. You know, they all get together on forums and they're all texting each other, or, you know, it's just, that's fine. If that suits you, that's absolutely fine. And you know, I've got a number of clients that do extremely well by trading those shorter time frame charts. But if you are to trade those shorter time frame charts, what I'd strongly suggest you do is just dedicate an hour or two per day, pretty much at the same time if you can, and just look at those shorter time frame charts just for a certain time every day, because then you'll get used to what the market's doing at that time. But really, if you want to be trading and to enjoy it as a longer term thing to do, you know, as a job, let's say, then realistically, you're far better off. Excuse me, I need to put these on, that's better. It's so bright here, I need the sunglasses on. But really what you need to be doing is looking at longer time frame charts. You know, you need to be looking at daily charts, 12-hour charts, 6-hour charts, etc. because that realistically is going to give you something that you can trade day after day, week after week, year after year, without being a burden to you. And that's one of the things that if you are trading, say like, you know, for 5-10 hours a day just staring at charts, just think of it this way. You know, would I want to be doing this in 6 months' time? Would I want to be doing this in a year's time? And then, you know, if your answer is yes, well, that's fine. But how can you then go away, enjoy places like this, you know, and trade at the same time? Because the beauty of looking at those longer time frame charts is I can plan my day around what I'm doing, around my trading. You know, come here and enjoy the scenery and, you know, trade daily charts. And the great thing about the daily charts is that at exactly the same time as the daily chart closes, which is 5 p.m. New York time, I can also look at the 4-hour or 1-hour charts if I want to, or 4 hours, 6 hours, 8 hours, 12-hour charts. You know, there's multiple different time frame charts I can look at exactly the same time. Look at those trades. As an example, today I've taken 2 trades on the daily charts and I've placed 2 on the 12-hour charts also. And put those trades on, and basically I've got my risk allocated, I've got my stop loss, my profit target all in place, and I'll come back and just check on those charts during the day, but I'm not going to be spending, you know, hours and hours just watching the screen. So I believe that's the best way of enjoying your trading, of trading with less emotion in your trading, and also with the longer time frame charts generally get the higher reward to risk out of those trades. Spread becomes less of an issue, news events become less of an issue. So there's many benefits to looking at those longer time frame charts, you know, and also generally those time frames become more reliable. So, you know, you can see a trade, take a trade. It becomes a far better way of trading. The other thing I wanted to mention also is that over the last week or so, we've seen the British pound crash. And I've had some people say to me when I've been placing sell trades, whether it's pound yen, pound US, whatever it might be, but generally, you know, let's say the pound yen as an example. You know, people have said to me, Andrew, why are you still taking sell trades when, you know, things like we're at the bottom Bollinger Band, or the stochastics are oversold, or the RSI is doing this, or the MACD is doing that, or the, you know, whatever it might be. People are saying, well, why are you still taking sell trades? The reason is because I'm still taking sell trades is because the charts are telling me that the British pound is still weak. And when you put it with a stronger currency such as like the Japanese yen, then just looking for sell trades is the obvious thing to do. If you have a look at last week's video, I mentioned pound yen sell trades even back then, and here we are 1 week later, I'm still looking for sell trades on the pound yen because they're still there. Sure, the indicators are saying that that pair's all oversold and you know, they're starting to turn up and therefore the pair must rise, mustn't it? Well, no, not necessarily, because the candle patterns, the weakness in that pair, the weakness in the pound, the strength in the yen, are all saying continue to look for sell positions, short positions on that trade, on that pair. So, you know, naturally that's what we're looking for. So just because, the message is, just because an indicator, which don't forget is a lagging, a lagging indicator, you know, it's not something to be overly relied on. It's only telling you what's happened in the past. So just because people who get you know, too caught up on indicators are seeing an oversold situation, don't forget that the price can still continue to move down, because ultimately it's the price that's important. So that's the two things I wanted to share with you today. One, really strongly consider those longer time frame charts, and two, study what the charts are telling you. You know, if you're thinking, well, this has to move back up, it doesn't mean to say it has to. The charts, the fundamentals, everything, the longer time frame charts, the immediate shorter time frame charts, if they're saying sell, just keep selling, because that's not only going to give you higher probability trades right now on those particular pairs, it's trading with the trend. Sure, there will be upward movements. Now let them happen. It's quite dangerous in some ways to trade those pullbacks and those retracements, because you know, you are trading against that longer time frame chart. So let them happen. Let the buyers push the trade back up if that's what it's going to do, and then look for a great opportunity to ride it down short again. So I hope that really helps. I'm off to enjoy the stunning beach behind me here. So if you ever do come over this part of the world, this is called Oniroa. It's on Waiheke Island. One of my favourite places in the world. I love it here. And I'm off to enjoy it for the day and check my charts later. So this is Andrew Mitchem from the Forex Trading Coach. Take care, have a great weekend. Talk to you this time next week.